Mortgage rates are the highest they've been ever in the 21st century. They haven't been this high since December of the year 2000. Could we see 8% mortgage rates soon? There are still less homes on the market today than there were a year ago, and not even these crazy high rates are helping the supply shortage. How are these high rates impacting home buyers? Will prices ever come down, and what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be looking to sell your property, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes had price decreases, and what's inventory looking like. And make sure to stick around until the end where I do my favorite part, the top 10 ranked chart. It's the top 10 hottest and coolest cities and zip codes in all of Dallas and Collin County. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 21st. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it will take you to the latest market update. First up is always market news. The big question is, could we see 8% mortgage rates? As we discussed last week, inflation is cooling quickly, but the Fed isn't going to back off of these high rates until they see a reason to. And so far, the economy is still too hot. Unemployment is too low and nothing is breaking. Not even the housing market. Even though homes are less affordable than they've ever been, enough people are still buying them and prices aren't coming down in many areas. So, based on the Fed's own criteria, there is no reason that they're backing off until something breaks. So, can we see 8% mortgage rates? Absolutely we can. And it's not even so much from the Fed hiking rates as it is from the spreads on the 10-year to the 2-year Treasury getting worse. But to keep it simple, let's look at the 10-year yield. Okay, here we have it, the 10-year yield. All right, as you can see, October 17th of last year, we hit right up here. It was around a 4.33 something. You can see we had a ton of selling after that, immediately came down to the bottom of our range. And basically this range has been about 6% to 7% mortgage rates all year. So anytime we're down here, we're closer to 6. Anytime we're up here, closer to 7. And it looks like we're finally breaking out of that. So you can see what happened last time we hit up here, right about where we are now. We had a big rejection and we actually came all the way back down. So that's one possibility. But this is not used to predict the future. This is just to show you where we're at. So what will it take to get to 8% rates? Well, we have to break through this. Last time we got here, we saw a huge rejection. This is the first time it's been tested since October of last year. So the next few days will be very telling. But what you're hoping for is a big rejection like this last time that starts a cascade all the way back to the bottom of the range. I do not think that's likely, but it happened once. So you can see we're already starting to blow past that line. We would have to see several candle closes, and don't be surprised either. So you see the smaller range, see how we broke out through it when we saw a few daily closes. Well, we saw one daily close above, then it came right down, tried to break above again, came down. So we stayed back in this range and then shot up. So don't be surprised if we break out for a few closes and then we come back in here. Don't think that that means it's over, because just like you saw here, it can just start ripping again. So basically all you need to know is we need this to stay below this line. Otherwise, we're going to 8% rates. That's all you need to know. So if you want to be anxious and biting your nails for the next few days, you can stare at this 10-year Treasury chart and see if we get above and start closing some candles above this 4.33-ish number. So it's not helpful at all. It's not going to help you make any decisions, but it's kind of fun to watch. And when you're looking at this chart, think of it just like any other chart. It's literally just buyers and sellers. Are people buying 10-year treasuries or are they selling them? The higher they go, there's a good chance people want to sell them, which then causes the rejection back down into the range. Then as they get cheaper, people want to buy them. So it's just the same as everything else. It's supply and demand. So hopefully as we get up here, people say it's time to sell, and then it's going to come back down. Okay, now we're moving on to mortgage rates. As you can see, we started last week at a 7.19, headed straight up to 7.37, and at least we stayed there for 2 days instead of continuing to climb. So 7.37 is where we start this week, and it is crazy to think that just 2 weeks ago we were starting at a 7.03. So that's how much it can cost you waiting even 1 to 2 weeks. It could cost you hundreds of dollars on your monthly payment. So this makes 15 consecutive weeks around or above 7% rates. Now regarding mortgage purchase applications, we very surprisingly actually saw no change. You would think with rates shooting up that there would be a decline in demand, that is a decline in people applying for mortgages, but there was actually zero change, no decline at all. And this comes after the last 3 consecutive weeks, we've seen about a 3% decline every week. So for rates to get this high and us to see no change is very surprising. Okay, now we're looking at our inventory and new listings charts that we've been checking every week. Remember, each one of these black dots represents 1 year, so obviously we're still below inventory that we had a year ago. We can see that better represented on this line. Things to watch out for on this are, when will inventory start declining again? It happened here close to September. Here it happened mid-September. Remember this green line, which is 2022. This is when we saw rates really starting to shoot up, which caused a second push up in inventory. So we don't actually know what the peak of inventory is going to be, but we would guess it's coming up soon, somewhere mid-September probably. And then looking at new listings, of course, this has been trending at all-time lows all year. The black line is the amount of new listings that come on every week. And even, you remember how crazy 2021 and 22 were, how few homes there were. Well, 2023, there are so many less homes coming on every single week. And really at this point in the season, we're expecting it to decline all the way to the rest of the year. So just keep that in mind. You're going to see less and less new listings every week. And you don't have much more time until inventory starts declining as well. So not something to be worried about, just something to be aware of. Just know if you're looking to wait a few months to buy, what are things going to look like then? You can expect less inventory and less new listings coming on every week. And all this is telling us is that there's no evidence that it's going to get any easier to buy a home moving forward. So I say this every week. I still think it's important. If you can buy a house, then buy a house. Don't try to time the market. It's a losing game. There are still too many buyers for too few houses. There's no reason to believe it's going to get any easier from here. Everyone who has waited this far has regretted it. And if you're still on the fence about whether or not now is a good time to buy, please watch this video. Okay, we're moving on to MLS data. Starting with Dallas County, over the last week, we had 315 closed sales. That's 23 more than last week. We had 475 new listings. That's 40 more than last week. And 100 of the homes that closed were immediate sales, meaning they sold within the first week. Looking at Collin County in the last week, we had 264 closed sales. That's 57 more than last week. 297 new listings. That's 41 less than last week. And 76 of the homes sold were immediate sales. So both closings and immediate sales went up this week. Dallas County saw an increase in listings while Collin County actually saw less homes listed. Okay, let's move on to housing data. Okay, as you all know, what I use is called the Market Action Index. It just takes all of this data and puts it into one easy to read graphic. Anything above a 30 is a seller's market. Anything below a 30 is a buyer's market. Dallas County is still firmly at 50. As you can see, we're now like 3 months into 7% or higher rates. And we're finally this last week starting to see a drop in median list price. So that's expected. As rates go this high, prices should drop. I don't know if they're going to be significant. They haven't been so far. In fact, even with all the rate hikes for the last year, prices have either gone up or stayed steady, but this is new territory. We haven't been this high in this century. So we're going to see what happens to prices over the coming weeks. Immediately this week, we do see a drop here in the median list price of $444 down to about $440. Median days on market hasn't changed in a long time. The number of homes having price decreases is still about where it was last week. Yeah, 42 to 43. And you can expect this as well. So if your home has been sitting on the market for 2 weeks already and rates just went up, 0.3%, it's likely you're going to have to drop some if you want to sell it. Because if the people who could afford it then didn't want it, people are going to want it even less when they have to pay several $100s a month more for it. Looking at inventory, it has stayed pretty flat. In fact, it's gone down since here, 27 to 2685. So not good news for inventory. Like I said, we could be seeing the top of our inventory for the year in like the next month. So this may be the most homes that you're going to see on the market. So this is probably close to the most homes that you're going to see on the market. Of course, that's going to depend. If rates shoot up to 8%, who knows what's going to happen? That's no man's land for us. And then of course, just looking at the market action index, we were up to 56 here and we've been dropping. Moving on to Collin County, about the same. We did see median list price drop below where it's been. 35 median days on market, 48% price decreases, having the same issue that we just discussed. That is 100% because of mortgage rates. And you have to also remember that at the point that mortgage rates drop, whenever that may be, these numbers can reverse hard. So you're seeing a decline that is totally artificial based on rates. You will see an equally artificial increase once rates reverse, and no one knows when that's going to be. So please don't think that this has to continue down. Eventually the Fed will start cutting rates or at least announce that they're not hiking anymore. And something to look at here in Collin County as well is that inventory is not climbing anymore, and it hasn't been for weeks. So again, at the point when rates reverse, this very well may be the most homes that we're going to see on the market this year. So if rates reverse, you're going to see this number drop fast. All right, moving on to my favorite part of the video. This is the top 10 ranked charts. These charts are using the Market Action Index to rank the hottest and coolest both cities and zip codes in all of Dallas and Collin counties. So starting out with the hottest cities list, Carrollton remains the #1 spot. It took it over last week. Balch Springs heats up 1. Richardson heats up 3, and I believe this is the highest it's ever been, is number 3. Grapevine cools off 2. Louisville remains. Coppell heats up 1. Sachse cools off 3. Irving remains. Lancaster comes onto the list for probably the first time I've ever seen it. And Garland remains in the #10 spot. So the big news is Richardson heats up 3 spots, probably the highest I've ever seen it, and Plano gets knocked entirely off the top 10 list. Now we like to zoom in and look at specific zip codes. The absolute hottest is Richardson, Texas 75082, Carrollton 75007, Plano 75023, Garland 75044, Richardson 75081, Grand Prairie 75050, Grand Prairie 75052, Carrollton 75006, Balch Springs 75180, and Louisville 75067. So those are the absolute hottest cities and zip codes. Now we're going to do the same thing, but we're looking at the coolest cities and zip codes, starting with Whitewright. It's no longer a buyer's market, which it was the last week or two. It's up to 30.57. Remember, 30 or below is a buyer's market, though it's hanging on by a thread, along with Leonard, which actually cooled off one and switched places with Blue Ridge, followed by Ferris, Sunnyvale, and Rockwall. And these all heated up one because Leonard jumped onto the list. Van Alstyne jumps on the list out of nowhere. Farmersville as well jumps on. Red Oak cools off 1, and Salina heats up 2. So something to note about this list is a lot of these are smaller cities, and in order to make the list, you have to have a minimum of 10 inventories. So it's harder to tell exactly if they're heating up or cooling off because some of these will just jump on the list out of nowhere, and then they'll jump off the next week as they go below that 10 inventory. But these are the coolest cities. Now let's look at the zip codes. Whitewright 75491 is the absolute coolest, followed by Leonard 75452, Blue Ridge 75424, Ferris 75125, Dallas 75203, Dallas 75219, Sunnyvale 75182, Rockwall 75032, Dallas 75208, and Grand Prairie 75054. Then we always want to take a quick look at inventory. This is the 90-day and this is the 7-day. And I just want to point out that a lot of these have either flattened out or started to drop. So Dallas is flattened out, McKinney is for sure dropping. Frisco is pretty flat the last few weeks. Plano dropped as well. Prosper is flat. Garland climbing a little bit. Royce City falling. Rockwall flat. Mesquite pretty flat. And Allen is even dropping. But again, this matters very much because it's very likely in the next few weeks we're going to see the inventory peak for the year, which is not good. We were hoping to see a lot more inventory come on in the summer market, but there have just been too many buyers for too low of inventory, which means we're likely starting off next year with more inventory than we did this year. So at the point when rates do drop, we're going to have almost no houses on the market. So please buy before that happens. Okay, that's it for me this week. I'd love to hear any feedback from you in the comments. And again, if you're looking to buy or sell in the Dallas area, just call, text, or shoot me an email. I'd love to connect. Thanks for watching. I'll see you in the next video.